Is the Texas housing market on the brink of chaos? We're diving into this hot topic today.
That's right. With the Federal Reserve hinting at possible interest rate cuts, the stakes are high for buyers and investors.
Brace yourself for insights from Jason Walter and Cathie Wood as they dissect the current trends. Welcome to Financial Insights in Minutes, your go-to source for the latest on real estate market trends.
Today, we'll summarize the most pressing videos on the housing market and what it means for your investments.
Stay tuned for expert predictions and strategies as we explore the future of housing in Texas. Let's dive right in. We're talking about one of the wildest claims of free money ever to hit the internet, the Chase Bank glitch.
That's right. This viral event has caught everyone's attention, sparking curiosity and caution. Why is this a gigantic red flag for anyone dealing with finances? Well, here's the scoop.
What's the core takeaway from the chaos?
The thesis revolves around a critical insight. There's no such thing as a free lunch, or in this case, free money. Fraudulent behavior has severe consequences, and banks won't just shrug it off.
Let's break down what happened with that glitch. Can you give us the detailed scoop?
Sure, users discovered a loophole that allowed them to withdraw funds instantly after depositing checks. With a viral reach of 20 million views on social media, it rapidly spread. Spoiler alert, this is check fraud and illegal.
Yikes. What are the real-world consequences for those involved?
Convictions for wire fraud can lead to up to 30 years in prison. Once the glitch was patched, many found their accounts frozen and debts soared into thousands.
And how did Chase Bank react to this debacle?
Chase Bank made a firm statement against this fraud, reinforcing that fraud is punishable and they are actively working to recover losses.
What about the future? What's your prediction based on this mess?
Increased security measures are likely in banking apps to prevent events like this in the future. Banks will tighten procedures. Expect harsher penalties for any similar misconduct.
So to sum it up, what's the essential takeaway here?
Engaging in something like the Chase Bank glitch is a major risk and leads to severe consequences. Instead, let's promote responsible financial behavior.
Now that we've wrapped it up, we want to hear what you think. How can we combat such viral trends in banking?
Comment below with your thoughts. Together, let's navigate these financial waters smarter.
Time to navigate the currents of today's discussion. Florida's housing market is on the verge of a steep decline, with home prices potentially crashing by 40% in specific cities. This is a real concern for buyers, sellers, and investors alike.
Absolutely. With rapidly increasing inventory and a drastic cooling trend, it's crucial to stay informed if you're looking to buy or sell in Florida's top 10 cities that are about to see significant price drops.
So what's the core issue here? Why are prices about to crash?
The core thesis reveals that inventory in Florida is spiking, indicating a significant downturn. In fact, many areas have overvalued properties by more than 30%, leading to a disastrous outlook for home values by 2030.
Let's dive deeper into Cape Coral. What's happening there?
Incredible inventory increase, from 1,900 to over 9,000 homes for sale, a clear signal that the market is cooling down. Plus, home values are still 22% overvalued, indicating significant room for price drops.
And Jacksonville, what's the scoop there?
Jacksonville's median list prices are already down 4%, but the expectation is that prices could plummet by 15 to 20%. The investor market, which once boomed, is now facing a surge of homes available for sale.
What about Naples? It's known for luxury, but what's the reality?
Naples is a prime example of the risks. With 30% of homes sitting vacant and a striking drop in prices by 10% this past year, we're clearly seeing the market turn upside down.
Orlando is a big tourist spot. How does that affect the housing market?
Orlando's housing values are 28% overvalued. With many jobs tied directly to tourism and unfortunate economic downturns, we could see major price reductions as unemployment rises.
And what's happening in sunny Miami?
Prices are down 13% in Palm Beach County, with inventory skyrocketing. The shifts are creating a volatile market, and many investment deals could go sour.
What about predictions for Orlando? Are we talking doomsday?
As unemployment rises due to recession fears, we could see even steeper declines in housing prices. A risky wave coming in.
And Miami's future? What should buyers keep an eye on?
With Miami still overvalued by 30%, a market overhaul is imminent. Buyers should expect shifts and prepare for erratic changes.
To wrap things up, what's the key takeaway for our viewers here?
It's essential to stay vigilant in this volatile market. With numerous cities poised for substantial declines, wise investing could be your best bet in steering through rocky waters ahead.
We're curious, what measures can buyers take to prepare for these shifts?
Great question. Engaging with transparent market analysis tools and understanding local trends could empower prospective buyers to make informed decisions. The right move now could lead to amazing deals later.
Tonight's housing market is nothing short of a tempest. Joining us is Stuart Epstein, a local mortgage lender with a wealth of experience navigating these turbulent tides.
Indeed. As we dive into this crazy market, Stuart's insights on mortgage financing and market trends will be invaluable for all aspiring homeowners out there.
So what's at the core of tonight's conversation?
The crux is the extreme unaffordability in the housing market, exacerbated by high interest rates and corporate investors that are squeezing out everyday buyers.
Let's discuss the impact of corporate investors. What's their role in this madness?
Investor activity is skyrocketing, making the market less favorable for individual buyers, particularly first-timers, who are being priced out left and right.
How about interest rates? Are they making things harder?
Absolutely. Rising interest rates mean higher mortgage payments, making it tough for many to keep up with soaring housing prices.
What's the current state of home prices?
Home prices continue to be a roller coaster ride, with many homes on the market facing price reductions, reflecting the crisis in affordability.
So what's being done on the governmental level?
Various programs are being proposed to help buyers, but many are wondering if these initiatives will truly address the affordability crisis.
What's the prediction landscape looking like?
There's talk of a potential market correction possibly unfolding by 2025, which could lead to substantial price drops. Staying tuned is crucial.
Get your crystal balls out. What are the future predictions for the market?
Experts are forecasting a market correction with potential price drops of 10 to 15% looming on the horizon as uncertainty grows.
And what about interest rates?
We might see interest rate reductions by late 2024, but it's uncertain how this will affect overall home purchasing decisions and affordability.
As we wrap up, what's the big takeaway?
It's crucial for prospective buyers to enhance their financial strategies and remain vigilant of market conditions to navigate this volatile environment effectively.
Lastly, what's the message for potential buyers?
Increasing financial literacy and readiness for market shifts will be essential in making informed and timely home buying decisions.
How about you? What do you think will be the next big shift in the housing market?
Share your thoughts with us in the comments below. We'd love to hear how you see it all playing out.
Today's topic is all about the economic collapse that's sending shockwaves across the labor market. Are we really witnessing mass layoffs and a collapsing economy?
Absolutely. The insights today will shed light on how the Federal Reserve's policies are impacting our livelihoods and causing some alarming shifts in the labor market.
So what's the core message here? Why is this happening?
Essentially, layoffs aren't just unfortunate events. They're dissected results of bad spending habits by the Federal Reserve, putting jobs on the chopping block to stabilize a faltering economy.
Let's talk about the unemployment rate. What's the situation here?
Even though 4.3% seems low, the upward trend signals potential stormy waters ahead. Historically, we see skyrocketing unemployment during recessions.
And those layoffs, what's the deal?
The data isn't looking pretty. A staggering 88,000 fewer jobs were reported, starkly illustrating the deteriorating job market, with over 1.8 million full-time positions vanished just in a year.
What about part-time jobs popping up?
It's a troubling trend. Full-time jobs are being replaced. It's a mere band-aid over deep economic wounds.
So let's talk predictions. What's on the horizon?
Expect more turbulence. With rising layoffs, we could soon see social unrest if businesses continue to crumble under economic pressure.
Any thoughts on what the Fed might do next?
Changes are on the horizon. The Fed may need to reevaluate their strategies for job creation versus inflationary pressures.
To wrap things up, what's the major takeaway?
Mass layoffs throw the spotlight on a critical issue. We need stronger accountability, and clear communication from the Federal Reserve regarding their actions.
Lastly, how can families navigate through these layoffs?
It's crucial to stay informed and engaged, understand your rights, and most importantly, connect with your community for support.
Time to navigate the currents of today's discussion. The Fed is gearing up to potentially cut interest rates in mere weeks. How will that impact the housing market?
Absolutely. Jim Biel joins us today. With over 2 decades of experience, he's here to shed light on what this could mean for mortgage rates and homebuyers.
So, what's the crux of what we can expect from these potential cuts?
The main thesis here is that while the Fed might cut rates, it doesn't guarantee an immediate drop in mortgage rates, as the market often preempts these decisions based on predictions.
All right, what's the scoop on those long-term mortgage rates?
Here's the full report. The Fed's moves don't instantly affect mortgage rates. Instead, they often reflect market sentiment, which anticipates changes.
And borrowing costs, what can we expect?
Rates for student loans, car loans, and adjustable home equity lines will likely drop swiftly, while long-term mortgages will take a tad longer to respond.
Let's talk predictions. How should viewers strategize around mortgage rates?
Focus on upcoming economic indicators like job numbers and inflation, as they will guide the mortgage rate's trajectory over the next 6 months.
What's on the horizon with mortgage rates as we move towards the end of the year?
Predictions suggest rates may drop to the mid-fives, while political stability will keep fluctuations minimal during election cycles.
Interesting forecast. Will we see more sellers in the market too?
Definitely. As rates stabilize, expect more sellers to feel confident enough to list their properties, creating a more fluid market.
Okay, what are the final takeaways from today?
Navigating these currents of change calls for strategic awareness and a readiness to act as opportunities emerge. Keeping a keen eye on economic indicators can help buyers make informed decisions.
And remember, folks, what strategies do you think buyers should implement right now? We want to hear your thoughts.
Drop your strategies in the comments below, and let's keep the conversation going.
Today, we dive deep into the Texas housing market and sought insights from leading experts.
That's right. Jason Walter and Cathie Wood offered us a glimpse into the complex dynamics at play.
While both acknowledged the risks, their perspectives differed on the impact of interest rate cuts on the market's longevity.
Indeed, Walter urges caution regarding immediate risks, whereas Wood is more optimistic about long-term recovery.
We hope this analysis has provided you with valuable insights for navigating the current housing landscape.
If you found this discussion enlightening, please like and subscribe to ensure you don't miss future content.
Thank you for joining us, and remember to check out our other videos for more financial insights.